A few weeks ago, I recorded a video with Rob Marstrand and John Butler in which I asked those two experts, should I buy a house? Of course, what we really discussed were things like demographics and interest rates and inflation, all the things that make house prices move. And as he so often does, my friend Sam Volkering interrupted uninvited and told us that there's far better options out there in the digital space. And it just so happens that there's a digital land boom taking off right now. I don't even know if I'm using the right terms here, Sam. It seems like an oxymoron to me. So tell me what's going on.
I love how you said I stuck my nose in. Was it unintentionally uninvited?
Uninvited.
Yeah, I love to do that, especially when I see something of great interest, especially when I can raise a few eyebrows. And when it comes to digital real estate, virtual in-game economy land, whatever you want to call it, NFTs realistically is what we're talking about as well. You know, it gets people talking and it gets people thinking because there is a bit of a boom happening at the moment, which is partly funded by the idea of virtual real estate, but also partly by the idea of NFTs. So yeah, we should dive in because it's I think, and this is my view on it, and I've had a fairly lengthy run in terms of my experience with virtual real estate as well. I think this is something that everybody, if anybody's interested in property, they should be interested in virtual property as well, basically.
The way I imagine this is through the game, I think it was, called Second Life, which was basically a computer game where you created a person, an avatar, which was you, and you played a game, but the purpose of the game was that you lived in the game rather than, I don't know, going on a quest or an adventure. It was like a second reality, and you could live your life within the game instead of having to deal with the real world. And there was a community of people who really focused their lives on what was going on in Second Life. Now, in that sort of world, the rules of physics or space do still apply. Things are still next to each other in sequence, and therefore that space, and I think usually people refer to this as space rather than land. That space has value based on what it's close to, and all sorts of other factors. Is that an understanding of what's going on now? And is it just this idea of the metaverse, or is it even bigger than that?
Look, it's bigger than what most people probably give it credit for. Look, realistically, so before when in your little introduction, you were talking about your discussions with the other guys, and what you're really talking about is things like demographics and everything else that impacts land and the idea of owning a house or owning land. It's actually a similar conversation, really, when it comes to virtual land as well, because what we're really looking at is we're looking at societal shifts, we're looking at trends in how people interact, how they want to interact. We're talking about the living standards and the wealth diversions that we see between aspects of the socioeconomic plane. So there's a lot of moving parts realistically as to why this is a thing now. And you're right, the idea of owning assets in a game isn't exactly new. Um, but the difference this time around is that where something like those previous virtual worlds were really controlled by game developers, they existed on centralized servers. Some of the newer virtual worlds and some of the games in which we're talking about, where you can own real estate, they're not controlled by like EA, Electronic Arts, or Activision Blizzard, or these big game giants, these multi-billion-dollar game giants. They're owned by the people that contributed to the network, the people that own the land on a blockchain, typically. Um, it's theirs. It's even more theirs than the land that your physical house sits on. And so that's quite a powerful idea. But I think what's really making it interesting at the moment is the idea that some of this land in certain virtual worlds can actually then generate yield. So in some, you can rent them out. Some generate in-game assets, which can be traded on exchanges for real-world value or cryptocurrencies. So there's a number of different ways in which you can utilize and put your land to use, much the same as you would in the real world as well. And while it fluctuates, you can generate some pretty impressive yields from virtual land, better than what you probably find from the rental market in the real world. So there's a lot of moving parts to it, but I think if you boil it down into one very simple, easy to understand idea, it's that basically you kind of subscribe to the idea that we will exist and people will interact and transact in the future more in virtual worlds, or you subscribe to the idea that we won't. And I think therein kind of lies where people will decide if this is something they want to step into and look at as an opportunity, or they won't. You either believe that our future is more digital, more online, or you think that things are going to stay the same or regress back to a more analog existence.
I think what people don't understand about this is something that's very basic, which is obviously true about the real world, and that's the idea of scarcity. So if someone builds a house somewhere, that space is taken up, and the amount of space we have in the world is restricted. But neither of those apply, as far as I can understand, to the digital world. So how can this possibly work in in terms of the most basic mechanics of it?
It doesn't apply to the virtual world. So some of these virtual worlds, it does apply in terms of that they have built a world or they have built land that is scarce. That there won't be more, or if they are adding more, they have made it very clear is that there will be a cap on the amount of land created. That doesn't stop another virtual world from being created, but effectively it's a complete. It's like it's a different world. So it doesn't necessarily mean that everyone's going to populate that world. So there's an element of uncertainty around, who's going to use these virtual worlds. Are they going to use? Because when people talk about the metaverse, it's a confusing situation because people talk about the metaverse and the sort of initial idea is that the metaverse is this one digital world, but that's just wrong. We're going to have multiple metaverses and there'll be a number of different virtual worlds. And some of these virtual worlds will be very closed, siloed virtual worlds run by the likes of Facebook or Google or whoever's, doing it from, that traditional centralized big tech point of view. And there'll be virtual worlds that are decentralized, distributed, like Decentraland or the Sandbox are two of the bigger ones at the moment in the crypto world. And they will be very widely owned by people who will participate in that world. And what we've seen recently is that some of these traditional companies from the stock market and from the big tech and big cultural brands have looked at some of these decentralized distributed virtual worlds and said, actually, this is where a lot of our future customers are hanging out. This is where a lot of money is being spent. We need to have a presence there as well. So to say that there isn't scarcity is true in one sense, but in another sense, it's also not true.
One of the things that sort of creates scarcity is this idea of NFTs, which we'll get to. Before we do, though, I want to just mention something which I think is one of the main arguments in favor of not just the land and real estate side of things, but also the NFTs, and that's the idea of convenience. It's quite complex to own a house. There's a lot that goes with it, and I think this idea of digital real estate comes with a huge amount of convenience in terms of transaction costs and maintenance costs that I think will not apply in a real house, which it comes fraught with all sorts of concerns, which we discussed in the previous video with Rob and John. Do you think that the everyday investor is going to be making money off of this in the next few years, or do you think this is going to stay? I think it's still niche. I don't know.
Yeah, I think for the time being, it is still niche, and it's difficult for a lot of people to get their head around the idea of virtual real estate because the fundamental belief is that there's nothing tangible, that you don't own anything tangible, which I think is a mistake because it's not really the case. What a lot of these parcels of land effectively equate to is a non-fungible token, an NFT, which is the ultimate proof of ownership. Like I say, it's easier to buy, to own, to transfer, to sell virtual land and like you correctly say, than it is physical land. So there is certainly an ease of access to this as well. And I think also, and this is where it comes back to things like socioeconomic issues, it's easier for somebody in their 20s, early 20s now to go and buy virtual land and earn yield off that virtual land. Okay, sure, it's not going to put a roof over your head, but what if that virtual land yields more than the rent you're going to pay because you can't afford to buy a house? So it's covering your rent and it's still making you a return. These are the kinds of things that, you know, we need to look at and consider. And I think this is what is making a lot of these sorts of things popular, is that there is money to be made. And it seems at the moment it's people who can't afford real estate or land in the real world are looking to the virtual world because there is an opportunity to generate wealth from it, whether it be through capital gain or whether it be through an income return, a yield return in cryptocurrency or whatever other asset it might be. So in that sense, you know, I think it's going to be hard to convince boomers to buy virtual land, to be frank. And I think that their kids and their grandkids are going to be the ones that do start to look into this space and say, actually, you know what? There's some opportunity here to make some money over the next 5, 10, 20 years. And there will be, I think there will be some big winners in this space. And there will be, look, don't get me wrong, this is early stages, it's still quite experimental with some of the virtual worlds that are absolute garbage and that no one's going to use and that aren't, you know, that far away from just being a scam. But there are some that are building robust foundations with, you know, as I say, you know, big companies getting involved. A lot of, you know, people have ownership of these lands. They're building within these worlds, and that other people can come and interact. Like you and I could be hosting this very chat in a virtual world, and we could have people jump onto, you know, let's say we built a stage and we're on this stage in a virtual world and we've got a whole crowd of everyone that's watching has jumped online and we can interact in a different way in a virtual world. It's difficult for people to get their head around, but that's quite a shift in how people today are looking to interact and transact and absorb information and disseminate information. So there's a lot of factors in play here, but I think to dismiss virtual land today at such an early stage would be a mistake for a long-term investor.
That's an extraordinary idea. My stomach really dropped at the idea that younger people are going to, you know, given the choice between real estate and digital real estate, you know, it's not quite clear which one makes sense. And that could really pull the rug out of the real estate market. You've made me worry about whether I should buy a house or not, which is how all this started. But before we move to NFTs, one last thing. When it comes to these digital worlds, where do you sit on the spectrum of this is a dystopian nightmare and we should ban them before our children get addicted on the one hand, and on the other hand, you know, in the future we're all going to discard our human bodies and get uploaded onto some sort of server and live in paradise?
I think the digital real estate world is going to look very different in a decade or 2 decades than it does now. You know, there's issues that will pop up around, you know, what if somebody decides to virtually recreate the entire world and then sells off the house that you do own in the digital world? Do you own that land, or does whoever created that within it, you know, own it? So there are ideas around sort of digital rights of the physical property that people do own. I think there's also I mean, look, there's generational shifts as well. So while it might not necessarily make sense for a 20-year-old or 30-year-old to be buying a house now, if their parents or grandparents have owned, you know, property, they've done pretty well out of it. That property is that value is going to shift at some point, because as we know, we all die at some point and our assets get passed down. So there is going to be a shift of property from generation to generation, as there has done for hundreds and hundreds of years. So it's not all doom and gloom if you don't buy a property, you know, when you're young, because admittedly, at some point, if your parents have been savvy enough to get one, you'll probably get one too. There's issues around those properties, the generational wealth shift from boomers to their generation afterwards. We could have another conversation on my views around that. But I don't think virtual real estate is going to pull the rug out of the real property market. I just think it's a bigger opportunity for, you know, younger people than it is the physical property market.
Let's move on to NFTs. And I think the way that I think about this is a bit odd, but I think it's the best introduction to people who are entirely new to this. And I think we've started to understand what cryptocurrencies like Bitcoin are. And because of the blockchain, there's a a proof of ownership. That's what it's really all about, proof of ownership. The problem is that what you might buy with those Bitcoins doesn't have the same type of proof of ownership. So for example, I could send you a Satoshi and say, we had an agreement to buy your shoes that are in the back of your video. And those shoes are not on the same blockchain as Bitcoin. So it's not really clear what's going on and who owns those shoes. And my claim against your claim, I've said, well, I've sent you the money and you said we didn't have an agreement. So in order for the whole system to work, not only the Bitcoin needs to be on the blockchain, but the shoes do too. So that the exchange of both things of value are registered on the legal terms. That's consideration. So that the value flows both ways. And what I think NFTs are all about, and I might have this completely wrong, is assigning proof of ownership, proof of stake in things that are not obviously on the blockchain inherently, like cryptocurrencies. So theoretically, every object in the world, including the digital world, is owned by someone, and there is a way to prove it using blockchain, which then means that you can transact in ways that have a secure and proven form of proof of ownership. Is that right?
Yeah, that's certainly one part of it. Look, I mean, if we were to use Bitcoin to transact value of some collectible shoes and things like that, you can record data in the blockchain as well. So we could record the serial number and we could record the agreement in the transaction so that it is proven that this was agreed upon and this was the price. So again, irrevocable proof that this is the transaction that we had intended. NFTs sort of take that to another level in terms of what they represent. Can be something digital. They can be tied in with something in the physical world as well. When that happens, when there's a digital representation of something that physically exists in the real world, that's also known as digital twinning, so that you have a twin basically in digital and physical form and vice versa. Again, this is not new. Like, this hasn't just appeared in the last 12 months. Virtual twinning, a digital twinning has been done for a very long period of time. IBM's been doing a lot of work around using blockchain technology to track provenance of goods and how they move around the world. The shipping industry has been very heavily involved in looking at this as a technology, again, to provide proof points along the way of a journey of something from A to ultimately Z. So again, it seems like what NFTs at the moment are really doing is bringing people's awareness to the fact that there is technology available that you can provide unique ownership of an asset, whether it be a digital asset solely or whether it be a physical asset that's represented in the digital space on a blockchain. And it's doing so in a very kind of roundabout fashion with, $1 million digital artwork and PFP avatars and things like that being sold and traded, and some being worth a lot and most being worthless. Nonetheless, it's bringing attention to a technology that can be used for a whole bunch of use cases in the future. NFTs could ultimately relate to the idea of digital identity online. It could relate to, like we say, just the transaction of real world assets. You could theoretically have your house as an NFT, and instead of going through the whole rigmarole of transacting a house with the land property register and all this kind of nonsense, it can be a much more easier and convenient way to sell and buy property. And that's sort of how I see this progressing, is that what we see now in the NFT space and the explosion around the awareness and the hype around it, it gets dismissed by a lot of people as being just some other Ponzi or some other bubble. But fundamentally, they're not understanding what the deeper meaning is, what the technology that is available can be used for in the future, and how there's a lot of things in our physical world, in our real world, that still carry extreme amounts of friction and extreme amounts of cost. Like, it's not cheap to buy and sell a house, right? But in order to do so in our future, that a lot of these frictions can be taken away using technology like this, applied in novel, interesting ways. But it just takes people a long time to change that mindset about what is now and what we're used to now, and changing that to a better, more convenient and efficient way.
I remember a story of a particular problem they have in Bulgaria. I think it was Bulgaria, where there's a registry for business owners. And one of the things that tends to happen in Bulgaria is when there's competitors in the same industry, one of the competitors will hire the way the story was told to me, it was hire a gypsy to break into this registry and to change the records. And the business owner would wake up the next day and his competitor would own his business. And it would take such a long time and so much money to process the correction through the courts that you might as well just give up. And apparently this is quite a common phenomenon. So the idea here is that we don't have that sort of problem occurring.
I heard there was a story recently here in England where a guy had come back to his house. He'd been like working away or something, and he'd owned a house that wasn't being lived in. And somehow, while he was away, someone had sold the house fraudulently to somebody else. They'd subsequently moved in, started renovating the house, and and just because somebody had decided that they were going to try and basically take ownership of this house. I don't exactly know how it was done, but it was done, and it was a recent story I read. And I think ultimately the guy whose house it really wasn't actually going to get it back. I don't think so. This stuff does happen in the real world. It's kind of like a analog hack, right?
Yeah, that's another good example, isn't it? But I think to focus again on what's really going on here, we know who owns our houses or businesses, whatever it might be, because there's a registry in the real world.
It's the Crown, isn't
but
it? The Crown own all their houses.
The digital world, though, faces a particular problem, which makes NFTs especially useful to the digital world. And that's, I think, called the idea of replicability. So a digital asset can be copy-pasted just as easy as you might copy-paste a word on your screen. NFTs have created a situation where that is no longer possible, or when it happens, it doesn't quite function in the same way, correct?
Oh, well, look, you could take a photo or a screenshot of anything and say you own it. But what an NFT does, and what blockchain technology effectively does, is say, well, no, you've just taken a screenshot of it. So, and I use this analogy a lot, but like somebody can well, you can't actually take a photo. You can buy a poster of the Mona Lisa in a gift shop. It doesn't mean you own the Mona Lisa. So, and it's the same thing, right? You can own an NFT and you own the NFT, and someone can take, right click save as, and they'll be like, I've got your NFT. And it's like, well, you own the poster of it, basically. You've gone to the gift shop and you bought the $20 poster. So good luck trying to sell it, trying to transact with it, or do anything else with it. Maybe some bum on eBay might buy it off you for another $20, but realistically, you don't own the original. And that's what NFTs do. They provide absolute proof of ownership.
Another way to think about that, which I've got stuck in my head, is if we had NFTs up and operating for the fine art market, and if that had been up and running in the 40s, and we had World War II, and then World War II ends, and they've destroyed all of these registries of who owns what art, and it becomes a real rigmarole of who actually owns what piece of art that's where, and the whole point of NFTs and blockchain is that because it's decentralized, it can't be destroyed, it can't be altered and faked, and so who owns which piece of art, and so it would have been possible to return all of that artwork that was stolen by the Nazis to the rightful owner. And the blockchain and the NFT system could withstand something like that. Is that accurate?
Yeah, absolutely.
Let's move on then into the speculative side of this, because so far we've discussed the part that I'm more interested in, which is how all this works and why it's going to change the world. But there is this huge speculative boom. Why is that happening? Given the fact that it's not just because these digital pieces of art have not become replicable anymore, or that there's proof of ownership now. There's something else going on here. It is a bubble in my view.
Look, some of it is, some of it isn't. It's. I mean, when it comes to some of the art, right, like CryptoPunks or Bored Ape Yacht Club, which have become hugely popular and extremely valuable, you could say there's a bubble in it. But it could be a cycle as well. Could be an artistic cycle, right? I mean, I'm no art expert. I've discussed this a few times on different podcasts and things. I'm no art expert, but it feels like this is a period of art. If you go back through time, there are different periods and phases of art. It feels like this is possibly one of those. And at different periods along the way, those become extremely valuable or not as valuable. And I think this is probably just one of those cycles rather than a bubble, because a bubble does pop and burst. So, but that's like saying Renaissance paintings were in a bubble and then popped and burst and whatever. These will probably continue to attract value over time because they're seen as having, an element of cultural significance related to this particular period of time that we're in. So history will really only tell if it is or isn't a bubble. I think what the important thing that people need to understand about the NFTs, particularly these avatar style NFTs that are really being bandied about and seemingly launched every other day at the moment, is that the bulk of them are going to be really not valuable at all. In terms of the markets will be incredibly illiquid. Now, if you've ever bought an NFT, that's one thing, but trying to sell an NFT is a completely different ballgame. You might jump onto a platform like OpenSea, which is the biggest NFT trading platform in the world, and you might see a whole bunch of these, NFTs listed with these huge values, but they're just listed. No one's bought them. So it could be like me grabbing, my little stonks final thingy here. I could list that on eBay for $1 million. And then people would be like, oh my God, the price of a stonk is $1 million. But I'm not going to be able to sell it for $1 million, am I? No one's going to pay that. You can buy it for like 40 quid off of YouTunes or whatever, YouTunes. So the idea that there's this huge value attached to a lot of these NFTs is crap, basically. They're just listed for high prices for ambitious people that will never be able to sell them. And the liquidity of them is actually really, really average. That's not the same for all NFTs, but for most of them, there's no market, there's no liquidity. And if you're going to go into this realm of buying NFTs or thinking that you can speculate on them, good luck to you. The approach I would suggest is that if you're going to buy one, buy it because you like to look at it, and that you ultimately want to be able to look at it for the rest of your life and prove ownership, because the likelihood is you will be owning it for the rest of your life. So in that sense, yeah, maybe there's hype. I don't think it's a bubble, but there's certainly a lot of hype attached that is unfairly placed, particularly with the art NFTs at the moment.
This gets at one of the misconceptions. And if you're sitting at home right now and you're thinking, I'm starting to understand what's going on here, I'm worried that I'm going to sort of crush that understanding by mentioning a post on social media I saw by a supposed NFT expert. And I believe she was absolutely shocked that she had seen other people displaying the NFT that she owned and without paying her. And a lot of people, including me, thought about this idea of NFTs as a bit like owning the intellectual property in a song, so that every time the song is played, someone has to pay you, or they're not allowed to do it. Or another example is there's actors who get royalty checks from movies from however many years back. That's not what this is. Proof of ownership is not the same as proof of the rights to an economic interest, or I don't know how to explain it.
Yeah, they're two different things. So you can own something, and somebody else, you could own an NFT and somebody else can use the image, and there's nothing you can do about it, unless you feel like suing them or something, right? If they're using it for like commercial purposes, because you can prove your ownership then that way. But that's no different to the real world. So no, there's not really anything you can do to stop that. But what you can do with NFTs is, if that is on-sold in a legitimate fashion, that you can receive royalties as the NFT creator effectively for life. So where this is really interesting, and where this starts to get applicable as to a broader application of NFTs, and something I've been writing about and talking about for a while, is the idea that other creative aspects like music can be NFTs. So if you think about, if you're a musician and you release an album, for example, and you release 100,000 copies of this album, and it's 100,000 NFTs. So each NFT is the full album. If that album is bought, sold to a friend, if somebody sells a fraction of it, a song from it, you can receive a royalty from that particular piece. And I think we're starting to see the music industry get a little bit more interested around the use of NFTs creatively, artistically, in terms of doing that, in terms of being able to have the creator paid for their work, and importantly, royalties paid ongoing in a very efficient manner and at a value in which they should be getting paid. Because one of the issues with current streaming services is that very little royalties end up being paid on to the original creative artist. So I think what we're going to see is, particularly in the music industry, if you think about how that world evolves in terms of formats over time and how musicians and creative artists are rewarded for their work over time, I think we're probably at the cusp of another considerable change in that world, away from these big centralized streaming services to a more distributed, decentralized, utilizing NFTs in terms of how the music industry operates. There are issues, obviously, then of people recording and selling those or distributing those online, but that's exactly what happened when people were doing that to CDs and the early days of Napster, and that created another revolution in how music is distributed and consumed. So, for all these things, there are issues, there are problems. We've discussed some of those with the art NFTs and just touched on it with music as well. But that's how we move forward. Is there are problems, we figure out ways to fix it, and something new is created in a better, more efficient way. Then there are problems with that, and the cycle keeps on continuing. So this is just another period of time where we dealt with these sort of new-ish phenomenons. We look at them, we figure out how we can use them. Is there money to be made? Is there opportunity for people to get involved, to profit? Are there issues with it? Invariably, yes, there are always going to be issues with it, but then people look to solve those issues and come up with new ways that these cycles continue. This is how technology cycles really work.
I guess if those problems were solved already, then those NFTs would be worth far more than they are now. And so really part of this bet is that you can have this stake your claim in something that is going to function much better than what we have now at some point in the future. And at that point, its value increases. It
wouldn't surprise me if somehow somebody figured out a way that you couldn't right-click save as or take a screenshot of an NFT when it was on your screen. If you could solve that problem, then yeah, you would be talking about an even greater leap in terms of value of some of these NFTs.
Sam Volkering, thanks very much for explaining all of this to us. I am still mighty confused, but you have made me think about whether I should be buying digital real estate instead of real estate, or no real estate at all. Thanks very much for joining us, and everyone at home, thanks for joining us as well.